Welcome back everybody, Sive here with the ForexPeaceArmy.com. Let's see what's going on the euro currency. So you can see yesterday lottery with the payrolls report was all not in favor of the bulls. So actually data was released significantly better, it's 2 times better. And you can see the reaction that we have on the euro currency. Still, despite the all bearish patterns that we've got here, I still have some doubts on the bearish perspective here. And some reasons for that. First of all, if you take a look at performance on the gold, for example, you will see that there was absolutely no reaction to the downside. Gold even has risen instead on this performance. In general, on other currencies, reaction down was relatively small. Even on the euro currency, despite that we've got this bounce, you can see the market right now showing some pullback. Yes, we have grabbers on the top. Right now we have 2 of them. Yesterday was another one, and both of them suggest drop below the lows. As alternative pattern that might be formed if grabbers start failing, I am not excluding the situation where we could get this butterfly to the upside. And potentially it might happen that we stand somewhere near the top of the right wing. Now everything depends on what will happen with these grabbers. Here we have to be extra careful. So yesterday you saw why personally I prefer to avoid any such kind of the action like the payrolls reports and Fed Reserve meetings, because I do not like to trade in a situation where nothing depends on your skills. So where you just a hostage of occasional event and that you absolutely can't control, and even reaction that you could make during the release, it's also limited in time, and actually it's more like they're shooting from the hip. So everything depends on how fast you are press your buttons on the keyboard. So that's actually what I do not like, and you can see what recently has happened. So here was straightforward downside drop out of the consolidation, and currently everything depends on this point, whether we will get the bottom of the possible upward butterfly and market starts upward action, or rubber still starts working, we will get downside continuation taken out of these lows. So depending on your view, you have different options to act. Here on the hourly chart, what you could do. If you trade and you would like to take the short position with the grabbers, your task is to take position as close to these tops as possible. From that standpoint of view, you could wait, for example, with some ABCD pattern to the upside and getting here regardless triple to sell. That lets you to take the position very small risk. It's possible counting on the downward action in a way kind of the ABCD pattern. That's the scenario for the bears if you would like to take the short position. Those who would like to long positions, you in turn also have 2 options. First is trying to take position somewhere with this regardless triple to buy pattern. This carries a bit more risk because grabbers still in place and we do not know what reaction will be on the triple to pattern here. But if your position taken right there, you have an advantage of the be possessed with the possible upward continuation right near the reversal points. Because if our suggestion on a butterfly here will be correct, somewhere in this point it will be the bottom of the right wing, because you can see that here market has dropped precisely to the support area that we discussed. 618 support, last actually outpost for the bulls, and natural area of the support resistance, you can see. So if our suggestion will be correct and butterfly indeed starts forming, that probably will be the bottom of the right wing. So that's the major advantage for considering position taking here. This I would call some kind of the aggressive style of the entering with the long trade. Here is actually because we're going against major rules. Despite that we have bearish patterns in place here, and still we are thinking about the long entry. Conservative approach here suggests that we need to get clearer signs that the grabbers will be erased. That might happen in a way if market start forming something like this. So it might be shoulder, head, market return back up, taken out of the top here, start forming right arm, and then you could try and take the position with the long side with the possible upward continuation. In relation to the big butterfly, both of these strategies gives you the same. So whether we're using this pattern for entry or that pattern, it doesn't actually make any difference to the butterfly that might be formed. This is just the way how market could start turning up. But for position taking, it's really different style, different risks, different advantages. So that's actually what we have in place. And also here, is if you're dealing with the hand shorters, you're getting protection against the action of the grabbers. Probably at this point, it already will be clear that the grabbers will not be in action, will be raised probably, something like this. So that's everything that actually we could consider. By the way, if you take a look at dollar index, you also could see here the same grabbers in the same direction, so in favor of the upward action on the dollar. And you see also here is the same humble performance. So it's not actually aggressive, it's just some kind of indecision performance, flirting at the same points. So here is reaction on the pearls also was not superb. So that's probably all for now. Think, decide. I explained everything that you could consider in the current moments. Choose what you like more, and see you tomorrow.